home, and he did it.
Hello, everyone, and welcome. Just waiting for everyone to get all set up and travel through the Zoom universe, get situated in the room. My name is Alexandra Carade. I'm here from Civitas Strategies Early Start, and I'm so happy that you all joined me here tonight. In this webinar today, we'll be discussing the Child Care and Development Infrastructure Grant Program and the implications that it can have on your taxes. I'm here from Civitas Strategies Early Start, a firm that has helped childcare providers across the U.S. learn how to navigate, access, use, and document stimulus funds. Civitas Strategies is currently on the ground, helping providers in 8 states, and recently took on preserving Tom Copeland's legacy through the Taking Care of Business blog. Before we get started, I want to let everyone know that your questions are welcomed. Today, we have joining with us 2 interpreters. One is my colleague, Vanessa Lumen. Vanessa is a Spanish interpreter, and she can help interpret any questions that you have in Spanish. If you have any questions you'd prefer to add to the chat in Spanish and have that be translated, then Vanessa is able to do that for you. In addition, we are joined by Una Wilkinson. Una is our interpreter for Cantonese and Chinese dialects. So thank you, Una, so much for being here today. And if you have any questions in Cantonese, please feel free to add them into the chat, or if you'd like any clarification in Cantonese as well. This presentation is being recorded, and there's also an informational guide that goes along with this presentation today. I welcome an interactive session tonight with good discussion. If you have a specific question pertaining to your situation, I ask that you please hold it until the end of the presentation. But if you have a clarifying question on a slide that we're on, feel free to add it to the chat, and we can address it as we go through the presentation. Before we dive in, I just want to say that the information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but cannot guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and your receiving it does not constitute any sort of advisory relationship. In today's conversation, we're going to discuss how is your business taxed, right? So this meeting is being recorded, just so you know. Today's conversation will focus on how your business is taxed, how this grant will impact your taxes, right? There's a lot of fear and anxiety around taxes because sometimes we have a lack of familiarity with the details. Sometimes it feels like the concept of taxes is too big or too complex to even comprehend, and we're going to break that down today. A lot of us might be involved in taxation on an annual basis, and we might collaborate with So we do have an interpreter with us today.
45 infant cereal, ready to eat.
Hi, this is the Chinese interpreter Yi Cheng. I think in order to for the interpretation to go live, you have to put the interpreters in the language channels first, and then turn on the interpretation function.
Okay, everyone, bear with me just a moment while we get this set up.
大家稍等一下。
Just bear with me for one moment, folks. right, just bear with me one moment. We understand that there are some issues getting into the webinar for some folks. Una, is there any way that you can walk me through how to set up that setting?
I don't know how to do that. I think that you have to do that in advance about the interpretation function. That is for live simultaneous interpreting. But then before that, you said there is no live interpreting. You only want to interpret the questions asked on the chat. So I did not. So, that's why I don't understand how that goes.
Okay. I certainly apologize to all the folks on the call who might have some difficulties understanding me this evening. I want to share that we will rectify this. We will ensure that you have the opportunity to get the information that you need from this call. Would you mind, Una, translating that and then Vanessa?
Okay. 大家好，因為咧今日我哋就好抱歉，因為喺技術上我哋未能夠做到呢個同聲嘅同步翻譯。咁而家佢係會講一頁，然之後可能係用廣東話同埋西語係做呢一個嘅再為大家做一個嘅傳譯，咁好等大家係了解今晚晚上呢一個嘅內容嘅。Vanessa, to you.
Vanessa, you're muted.
I'm sorry.
That's okay.
I could not mute.
That's okay.
So I'm sorry. I was seeing here there's an option that says transcript here, Lex, and I see everything that is being said.
Yes, so I'm understanding that there is another setting for that to be done in another language, Vanessa, and
Okay.
That tonight, and unfortunately we can't accommodate that this evening, and we will try that, but unfortunately I cannot resolve that in this moment. So Vanessa, would you please mind translating that for me in Spanish?
I'm sorry, do you mind repeating, Lex? I was trying to figure that out. Sorry.
Sure, that's okay. Tonight we're not going to be able to deliver the webinar live in more than one language. We will ensure that folks get the information they need in the future, in the short-term future.
Okay. Lamentablemente no vamos a poder recibir toda la información hoy con una traducción simultánea y vamos a hacer todo lo posible para transmitirles esta información de la mejor manera el día de hoy.
All right. Thank you all so much for your patience and your understanding. And I certainly, in Civitas Strategies, we do apologize for any inconvenience this may cause. Okay. So back to tonight's conversation. We're going to talk about how your business is taxed, right? There's a lot of fear and anxiety around taxes. A lot of times we're not too familiar with the details, right? It can feel like such a big, overwhelming concept. We're going to break things down today in a way that is a little bit easier to digest these concepts and make them a little more and in a way that we can describe and understand. Once we understand how taxes impact our business a bit better, dive into the tax implications of your grant. Your grant funds are looked at as business profit, and generally your business taxed, right? Well, if part of your new profit is taxed, that's not necessarily true. It is not necessarily true that you pay a portion of your grant money at tax season. Hopefully, this presentation will alleviate some anxiety about how much that tax amount might be, because we will learn about how taxes are calculated. You'll leave this presentation aware of these tax amounts, aware of how to plan with these implications in mind. I certainly appreciate everyone's patience as we work out some of the technical difficulties here. Thank you for bearing with us.
There are some background noise and it's hard to hear what you're trying to explain to us.
I understand. Thank you for bringing that up. So I believe everyone, there was a technical issue that prevented some folks from getting in earlier, and that has been resolved. So we're getting a lot of new folks joining. I so appreciate your patience. If you have been on since 9 o'clock, I know a lot of you, 6 o'clock, I know a lot of you logged on during the 5 o'clock hour. So if you could just bear with us, I promise this information is worth the wait. Let's just wait for everyone to log on and for the background noise. Thank you so much for your patience. All right, everyone. Thank you so much for bearing with us. I'm just going to give a brief overview of the slides that we already went over since we have so many new folks joining us. Thank you so much for your patience tuning in since 9 o'clock. My name is Alexandra Correa, strategy start. And tonight we're going to be talking about the implication of Healthcare and Development Infrastructure Grant Program and your taxes. Civitas Strategies Early Start is a firm that has childcare providers across the U.S. learn how to navigate, access, use, and document stimulus funds. Civitas Strategies Early Start is currently on the ground helping providers in 8 states and recently on preserving Tom Wilkins' legacy through the Taking Care of Business blog. For those of you who have already joined us, and I do want to reiterate to the folks who are joining us, there is a Spanish interpreter on this call, Vanessa, and there is a Cantonese interpreter on this call as well, Uma. This webinar will be offered with live translation, and I do apologize if there was some miscommunication around that. We will ensure that you get information. We will ensure that you get information promptly after this webinar. I also want to address some early questions that some folks might have. This webinar is around the implication of grant funds on your taxes, okay? So for questions around the grant and receiving the grant, timeline of the grant, all of those types of things, those are questions for the grant administrators. Tonight, we're going to be talking about the implication that grant funds can have on taxes. Some folks might have. I hear that some folks are having audio issues. I certainly apologize. So I believe I know how to correct this. Just bear with me one moment. I'm certainly apologize for the technical difficulties here, folks. All right. So again, we're going to dive into how your business is taxed, how this grant will impact your taxes, how much new money you will really get, and what else you should be aware of. Taxes are often associated with confusing and overwhelming forms, anxiety about future audits, and fears of a large tax. But tax season can be an opportunity for small business owners to save money and head off the risk of future issues. So how does this work? Your profit is the amount of money that you earn when you take in your revenue or your money coming in and subtract your expenses or your money. In simpler terms, simply how much money you take in minus how much goes out. But this is not your bottom line. In order to get to your bottom line, you need to consider how business expenses can reduce your taxes. Throughout the year, you spend money on expenses which are necessary to keep your business going. Your business expenses can be claimed as deductions on your, which ultimately impact the amount of money that gets taxed and potentially the rate at which you are taxed. Examples of business deductions include all the revenue you earn throughout the year, the materials and supplies that you need to run a healthcare program, including those needed to teach children, care for children, and create a safe environment. Also,
Excuse me. How can I put it the volume over here without taking out?
also any office supplies, right, that are associated with running your business. These are all examples of deductions. Any business-related insurance, like liability. Any business-related insurance, like liability insurance. If you own a commercial property, if you have any repairs and maintenance to that property, property taxes and mortgage interest, although I do understand that I'm primarily speaking to business owners this evening. If you have any employees, the salary and wages of those employees are also deduction. If you have a tax preparer, you're working with them and giving them the information, you're figuring out what your deductions are for you. They're adding them all. And this is why it's so important to itemize deductions, because you are spending naturally throughout the year on business expenses, right? Any materials and supplies needed to run a child care program, there's a business amount which is associated with those expenses which you are what you are buying, correct? So when you have these business expenses, they need to be written down and documented, because then they can be itemized as deductions by either you or your tax preparer. And the more deductions you have, the more business expenses you can account for. And in turn, that can reduce the amount of revenue.
You're on mute.
Oh, hi. Do you speak Spanish or only will be?
We have quite a crowd tonight. Thank you everyone so much for joining us. I see a lot of new folks coming in. So thank you so much for your patience with us as we're getting all these folks joining tonight. So if you are recently, we do have Spanish and Cantonese interpreters on the call. This webinar is not being delivered in live time. I'm sorry, this webinar is not being delivered in multiple languages at live time. It is being delivered in English. We are very sorry information otherwise. So if you do have any questions in Spanish or in Cantonese, feel free to add them to the chat. And that interpreter will be able to translate your question for you. So thank you everyone for joining us today. All right, so again, the amount of revenue you bring in minus the number of business expenses equals your tax. Ultimately, the more you are committed to tracking your business expenses and sharing them with your tax preparer, the greater the likelihood that your taxable income will decrease, which in turn decreases your annual tax bill. Again, the more expenses you claim minus your total revenue reduces your taxable income. Now, let's talk about how this works, and let's bring in some real world examples, okay? So let's say that you bring in $35,000 in revenue. You're subject to self-employment tax on that $35,000, and you're taxed at your general income rate on that $35,000. But if you claim no deductions. However, if you bring in $35,000 in revenue and you claim $5,000 in deductions, your profit is reduced to $30,000. And you're only taxed on that $30,000 profit. So let's talk about what that means, right? Now you have a net amount of profit that's subject to tax, and the more deductions you claim reduces how much of your profit is subject to tax. So if you're able to claim $5,000 and you earn $35,000, then that means you only have tax liability on $1,000. So since the IRS is looking at $35,000 instead of $30,000, your tax liability would be higher if you are earning $35,000. I do want to throw out there that self-employment tax is only relevant for individuals who are sole proprietors. And I believe most of the folks on the call today are sole proprietors. Yes, this webinar is being. If your business files taxes as an S Corp or even a C Corp, though that's much less common, then you're not subject to self-employment tax. But the idea here is the same: to maximize your deductions to reduce your net profit that's subject to tax. When you reduce how much of your profit is taxed, the amount of taxes you owe will decrease. If you're not sure what your business status is, you'll know if you're a sole proprietor if you report your business earnings each year.
Recording in progress.
On your 1040 Schedule C. So let's look at an example specific to the Child Care and Development Infrastructure Grant Program. This income is subject to federal taxes and state taxes. However, you can still deduct this expense. For example, let's say your grant award was $10,000. You are claiming $10,000 in revenue because that is how much you received from the grant. You are also then going to spend those grant dollars on certain expenses, right? Our learnings about profit, deductions, and tax liability directly relate to how you can use, how the grant funding will affect your taxes. The grant program is giving you funds for minor renovation, repairs, modernization, or retrofitting of existing childcare facilities. And the way you spend these grant funds can be counted as business expenses, which are eligible for deduction. So what happens if you're reporting an additional $10,000 of revenue, and then you're also itemizing your business deductions, and you are claiming $10,000 in expenses, and your tax liability increases by $10,000? I'm sorry, then your revenue is increasing by $10,000. Your tax liability is decreasing by $10,000, which in turn levels out, right? And this is true if you receive the and you spend and itemize the money in the same year. We'll talk about other situations as we continue in this presentation. But for now, let's focus on tax year 2022. Let's say that you're awarded $15,000 through this grant, right? And with the grant funds, you choose to do $17,000 in minor repairs. You have to report the $15,000 as revenue. And if you spend $17,000 on business expenses for minor repairs, then you can deduct the full $17,000. the additional $15,000 in income is offset, right? Which reduces your general income by $2,000. So you receive the $15,000 grant, use $17,000 for business-related repairs, and then you can itemize that $17,000 as a business deduction, which then reduces your tax liability. And ultimately, right, your tax liability is $2,000 less. Now, you might be wondering, if I can claim my business expenses as itemized deductions, then why do I need the grant in the first place? Well, the grant is giving you funds that you otherwise wouldn't have. When you're itemizing a deduction, you're reducing your tax liability, but it's not like you're getting any additional new money. The grant that's coming in is giving you that additional new money. So you're receiving $15,000 of new funds, and you can deduct with the business use of those funds, however much you use for business expenses, which in turn reduces your tax liability. Let's talk about the scenario of tax impact for expenses incurred in 2021, okay? So let's say that in 2022, you are $10,000 grant. The Child Care and Development Infrastructure Grant funding can support upcoming costs or can be used retroactively to cover applicable costs that occurred on or after August 1st, 2021. So that means that applicable costs that you spent August 1st, 2021 and December 31st, 2021 can be eligible for this grant, but you're receiving the grant funds in 2022. So what this means is that you have $10,000 of income which you must report for 2022. However, you cannot report how you're using the funds, how you used the funds in 2021 as a business expense for 2022. If you worked with a tax preparer in 2021 and you had business expenses in 2021 that were itemized, then you already received those itemized deductions on your 2021 taxes. So that means that for 2022, you cannot offset the $10,000 in additional income with a $10,000 deduction for business expenses. However, you're still going to come out ahead here. Most businesses are taxed at between 30 to 40% at the end of the day, right? At the tax year. When shooting in the middle of 30 to 40%, we're looking at 35%. And 35% of your total taxable income in this scenario for this provider, 35% of $10,000 is $3,500, which means that even despite this tax implication for 2021, the additional income which a provider is seeing in this is $6,500 new dollars that they did not have before. We held a similar webinar yesterday for another group of folks. And a question that I got then was, if we want to perform a project that occurs in 2023, if that's allowable and eligible by the grant, then how will that impact my taxes? And the answer is quite similar to the table here. If you are awarded $10,000 in 2022 and the grant allows you to spend that money in 2023, then your taxable income in 2022 is going to increase by $10,000, whether or not you spend those grant dollars in 2022 or 2023. So you will be taxed on that tax that comes in at between 30 and 40%, depending on your situation. And then you will realize additional income that's around 35% of the grant dollars. In turn, when it comes to 2023, and again, if the grant does allow income into 2023, if that occurs, then what to do in 2023 is to deduct the expense of your renovation, your retrofit as a qualified business expense in your 2023 income taxes. So you will see a reduction in tax liability in 2023, but you will not see that in as far as the deduction of business expenses in 2022. And so in this webinar today, I see some of the comments in the chat. I'm not able to all the comments in the chat live in the webinar. We'll go through some questions at the very end. But I do see some comments about how this is, we're talking about home centers today, right? And I completely understand that. Today, we're going to be talking about the tax implications for your business, right? And how tax implications on the business expenses. So there may be some prorating which has to occur, right, as part of this grant, and more information is forthcoming on that, I'm told. So while this presentation today is not touching on that, while I'm not able to speak to that, more information is forthcoming on the process of pro expenses relating to this grant. So let's talk about tax brackets, right? It doesn't sound like a very fun topic, but there's a lot of misconceptions around it that really benefit everyone if we clear them, right? So tax brackets are designated by the federal government for certain amounts of income earned. When we talk about tax brackets, we're talking about a range of dollars that are taxed based on a certain percentage designated by the federal government. The percentage of taxable income only applies to the dollars earned at and above the MET threshold, the range of dollars, not the dollars earned before that threshold was met. So this example that we're going to chat through does apply whether you are a sole proprietor or whether you have any other type of business classification. So just keep in mind here that tax brackets are determined based on your tax filing status. I want to thank the person that pointed out the lines in the presentation. I'm so sorry about that, and I'm not sure how that occurred. I do apologize about that. I think we are just going to have to continue with it there. Hopefully it does not compromise your ability to view the screen too much. Okay. Alrighty. So tax brackets are determined based on the head of household. So if you are whether you file singly or whether you file married filing jointly or any other type of tax filing status, that will affect how we're considering things today. So let's walk through an example. If you earn $50,000 and you get a $10,000 grant, how will that affect your taxes? It will bring your earning to $60,000. Let's talk through the difference in taxes for a provider earning $50,000 versus a provider earning $60,000. So this is a huge misconception when it comes to taxes. The first $14,650 that any person makes in the US who pays taxes is going to be taxed at 10%, right? So whether someone earns $14,000 or whether someone earns $140,000, the first $14,650 they earn will be taxed at 10%. You can see that for a provider who earns $50,000 versus a provider who earns $60,000, the first $14,650 that they earn in 2022 are going to be taxed the same amount. Okay. Now let's look to the 12% bracket. The 12% bracket indicates that dollars earned of $14,650 and below $55,900 are going to be taxed at 12%. So that means that any dollars over $14,650 below $55,900 are 12%. Now we do see a difference here between the person earning $50,000 and the person earning $60,000. And that is because the person earning $50,000 falls right in the middle of that 12% bracket, right? They haven't hit the top of that range yet, $55,900. They're in the middle of it. And so every dollar that $50,000 earner earns above the $14,000 mark is taxed at 12%. The difference with the 60% the $60,000 earner is that they have exceeded the 12% bracket top range number, right? So the top of the 12% bracket is $55,900. And at $60,000, that person has gone over that range. Now, because of that, right? So that person is now in the next tax bracket, which is 22%, which starts at $55,900. But here's the takeaway here. We see there is a difference within that 12% bracket range for someone earning $50,000 and someone earning $60,000. The difference is because there are simply more dollars to be accounted for. That $60,000 provider is not getting their money, their first $50,000 earned, taxed any differently than the $50,000 provider. The only reason that there's a difference there is because the $60,000 provider earned $5,900 more than the $50,000 provider and within the 12% bracket. And because of that, there is that additional money, $5,900, is taxed at 12%. Okay. So the difference of $708 is simply because there are $5,900 taxed at 12% that the $50,000 provider didn't revenue. And then we can see that the $60,000 provider, once they reach the 22% bracket, when they reach $55,900 in earnings, every dollar up to the upper end of that threshold is taxed at 22%. So that is $902 there. That is the difference, because what 902 is if you take $60,000 and you subtract $5,900, which is the start of the 22% bracket, then that's $4,100. And if you take 22% of 4,100, you come up with 902. The whole point of walking through this exercise is it really helps to see that no matter how much you earn, your initial dollars are being taxed the same. So if you're a provider earning $50,000 and then you receive a $10,000 grant, even if in this scenario, if you earn 50 and you get a 10K grant, even in this scenario, your extra earnings might push you into a higher tax bracket. That would be accurate to say. But just because you enter a 22% tax bracket doesn't mean that all your dollars are getting taxed at 22%. That's the big takeaway from this slide, right? Only the dollars exceeding the starting number of the new tax bracket, or you can look at it as the ending number of the prior tax bracket, are being taxed at that higher rate. So we can see here that the total tax is higher for the $60,000 provider. The difference is $1,610, right? But that's only because an extra $10,000 was taxed, and the amount taxed on $1,000 is the amount taxed on $50,000 is not changing, right? So ultimately, we're ending up ahead. And we're thinking about, right, when thinking about how federal tax brackets can help us to figure out the implications of the grant funds for us, right? If you're going to try to pay for a 2021 expense with a federal bracket increase, you can see that the provider that was granted a $10,000 grant, if they earned 50, and then their income was raised to 60, actually nets $8,390 of that $10,000 grant. So you can figure out, and this is, again, this is only for federal taxes. So you will have self-employment tax as well, and California state income tax. But often federal taxes are the ones that have a lot of us scratching our heads and thinking, what exactly am I paying and how is it even calculated? And there's a lot of mysteriousness around how they get to that number, right? And so we just want to demystify that here. So if you, in this situation, if a 50K earner gets awarded a $10,000 grant, then in that case, the amount that they have would be $8,390 of that $10,000 grant that isn't taken in taxes. And then what that means, right? So if you want to pay for a 2021 expense that was incurred during the eligible time period between August 1st and December 31st, 2021, you can look to the tax brackets to understand how the federal income tax affects your award. You know how much to set aside for federal taxes. You know how many dollars you will not need to set aside for federal taxes. And what that means is that if you already made a qualifying expense in 2021 that used these grant dollars, right? And these grant dollars are coming to you and you're able to reimburse yourself for those dollars that you already spent. And then you are able to reimburse yourself for that business that you already spent, right? In that case, you're able, when you get that money, you're reimbursing yourself because you already spent it on a qualified business expense. You can set aside a certain amount of money for federal taxes. In this case, it's $610. And you know that and prepare for how much is coming. Do keep in mind that if you are a sole proprietor, then you will have self-employment tax, typically 15.3%, and also California state income tax as well. Now, what else is there to consider, right? What else is there to consider? We're going to give a high-level overview of depreciation at this point so that we can walk through this concept. It is a very complicated concept, but as a business owner, it is helpful to understand the general concept of depreciation. I also want to say that the process of calculating depreciation for your business is one which should be done by an accountant or tax preparer. There are many considerations when it comes to depreciation now more than ever. So, typically, depreciation means spreading out how you deduct the business expense of an eligible purchase over many years. Eligible purchases are purchases of items which are items or equipment that are intended to last you many years. Traditionally, this deduction would be spread out over many years, so your tax savings each year is spaced out and smaller. That's how it traditionally worked, and that's the concept of depreciation. In 2017, the Tax Cuts and Jobs Act was passed, which implemented legislation which introduced bonus depreciation. Bonus depreciation is a method that allows businesses to write off a greater portion of the expenses for the tax year in which the business started using that purchase. The concept of bonus depreciation is going to be very important for your tax preparer to consider in 2020. And take my word for it that 2022 is just a very interesting year as far as depreciation goes. And you'd certainly, if you haven't connected with a tax preparer yet in the history of business, I highly recommend you do so this year because there could be some major tax year 2022 savings by looking at the depreciation of certain business expenses, especially if you are using your business expenses, if you are using your grant funds in 2022 for things like renovations and retrofitting, right? So very likely minor renovations, repairs, modernization will be eligible for 100% depreciation this year, which means that you can deduct the full amount. However, again, we highly recommend you can a tax professional who can help you to understand what opportunities there are for this year as far as maximizing somewhat new legislation that allows for bonus depreciation. Another thing to keep in mind is tax credits. We've talked about how We are going to be getting additional income this year, and we also need to itemize our business deductions, our business expenses, to reduce our amount of income that the IRS sees as taxable. Even if you're reducing your taxable income, you are still reporting the grant money as income, right? There are some tax credits which you might be claiming for yourself, such as the child and dependent tax credit. And your increase in revenue might affect whether or not you continue to be eligible for those tax credits. And there might be other implications well as far as things which qualify for your based off of your income. So this greatly depends on personal circumstances. If you are someone who receives some sort of service based off of your personal income, that might be affected if your income were to rise. I would certainly look into that and ask some questions, and just be aware that receiving the grant will increase the income that you're reporting. I certainly appreciate everyone's time tonight, and we will go into some questions after all this. The big points, the takeaways from all of this, is that the revenue from funds is taxable. However, the expenses, the business expenses, are also deductible, which can reduce the tax liability. There will be further information on pro-rate expenses related to family child care homes will be forthcoming shortly, okay? Unfortunately, I cannot answer any questions on that tonight, but I hope that the information on how taxes work and tax liability works can help you to understand the implications on your taxes. Again, everything I discussed tonight is true for sole proprietors, LLCs, partnerships, and any other sort of incorporated business. So if you joined in a little late, I know we had some technical difficulties to start out. I am from Civitas Strategies Early Start. My firm recently took over managing Tom Copeland's legacy through the Taking Care of Business blog, and we do answer questions about family child care almost every day, right, from folks like across the country. So if you have any questions about your family child care business, always feel free to log on to tomcopelandblog.com and ask the experts. I'm going to go over a few questions that I've been seeing as this webinar has been going on. So there is a Spanish webinar tomorrow night. It is at 6 p.m. Pacific, and we will have more, we will have some audio issues worked out by then. So I certainly appreciate your patience as we work through that tonight. For all folks joining us tonight who were looking for interpretations in languages such as Cantonese, we do apologize for that interpretation service to not have been offered time, and we will look into how to do this information that you need in a very short-term manner. Okay. Any questions about the child care and infrastructure development grant should be routed to grant representatives. I cannot answer questions on when the grant will be distributed, how grant funds can be used for your project. And I cannot answer questions about time space either, or any other type of prorating. More information will be forthcoming on that. I see many links in the chat. It has been my pleasure speaking with you tonight. If you don't have any questions, if you don't want to stick around for questions, feel free to log off. Vanessa, I see some folks asking for the Spanish Zoom link for tomorrow night. If you wouldn't mind adding that into the chat, that would be so very helpful, so that folks can log on and see that. Does anyone have any questions that they would like to ask at this time related to the webinar content? Bridget, go ahead.
Yes, hello.
Hello.
This is my question. I was granted the grant for reimbursed of the repairs I did back in December 2021.
Mm-hmm.
How's that gonna work for me if the grant I'm getting it this year So do I claim the 21, the repairs from 21 on 23?
Yes, that's a great question. So when you receive the grant in 2022, you're going to report that as income for this year. And so you
Okay.
can see in this slide that you will be taxed on that 10, if you were to get $1,000 grant, it might be around $3,500 in taxes. It's going to be around 30 to 40%.
Mhm.
So you will report that as income and you will see a tax on that. But because you paid for the, you said you paid for the expense in 2021, is that right?
Yes.
Yep. So because you paid for it in 2021, if you worked with a tax preparer in 2021, they've already itemized that business expense for you as a deduction. And so you already saw a level of tax savings in your 2021 taxes.
Okay.
Yeah. So it's a lot, I'll say, cleaner, right? If you were to get the grant and spend it in the same year, as far as a kind of a one shot look at your taxes, right? However, you got some savings last year. There's going to be some taxation this year, but as you can see in this slide, you're still coming out ahead because you're receiving grant funds that you otherwise wouldn't have had. And around 65% of those grant funds are new dollars in your pocket that are just yours to spend this year.
Okay, thank you.
You're welcome. All right, I saw an iPhone with their hand up for a while. Would you like to ask your question? All right, iPhone, you're more than welcome to ask your question later, but we're going to move on for the sake of time. Next, I see Angel. Oh, iPhone, hello, what's your question? iPhone, you're unmuted. Do you have a question?
No, sorry.
Okay, no worries at all. All right, Angel, what's your question? All right, Sonia, do you have a question? Hi, Sonia.
Hi. My question, I was one of the people who wasn't able to get in the beginning, wondering how I could get the whole video.
Yes, absolutely. Thank you for asking that. I will be sure. I understand that there were some technical difficulties in the beginning, and I'm so glad that we were able to solve that. So I am going to make sure that my delivers a full webinar recording to the grant providers so that they can distribute that recorded webinar in the future. So look out for that. That will be coming. Thank you, Sonia. Nina. Nina, do you have a question?
There we go. Now I'm unmuted. Thank you. My question was, did you say yes, you could answer family childcare questions about time space percentage or no?
Unfortunately, well, so for the sake of time, I will not be answering questions about time space percentage tonight. However, if you do have questions about time space percentage, I highly recommend that you log on to the Tom Copeland.
I wrote that down. My question was about time space percentage and if I could be adding that because of renovation hours would be improving the business, which would be extra.
Yeah, that's a really great question.
Thank you, though.
You're welcome. I think you will find the guidance on that at tomcopelandblog.com.
Okay, thank you.
Thank you. Patty Davenport, do you have a question?
Can you hear me?
Yes, ma'am.
Okay, my question was, my name is not on the loan of our home, but I am on the deed. Will I still be able to write all of this off?
Patty, I wish I could help you. Unfortunately, I can't answer that question. I can't answer any questions pertaining to Oh, can you write it off? Okay, I see what you're saying. As far as taxes go.
Yes.
I see. I see. So that's a bit of a complicated question. And I would consult with a tax preparer on that one.
Okay.
Yeah.
All right. Thank you.
You're welcome. Ms. Abigail.
Hi. I have a quick question. So I missed part of it because I couldn't log in and then my internet logged me out. But I am a daycare provider and I want to see because I asked for the loan and everything. But I just want to make sure that how do I know I really qualified? And last year I didn't qualify for any of the loans or any grants. Because they told me certain things about certain time framing.
Yeah.
But if I, how do I know if I qualified?
Unfortunately, I can't provide any information around qualification for the grant. I really wish I could help. Unfortunately, I don't have that information, and the grant representatives to give you some of that information. And I know some more information is forthcoming.
Oh, okay.
Thank you. Mrs. Letty, I'm not sure if I pronounced your last name correctly, so apologize if I didn't. What is your question?
Okay, can you hear me now? Sorry.
Yes, I can.
I'm actually talking on my wife's thing.
Hello.
My wife's sitting right here. Hey, sorry about that.
No.
My question is this on the bonus depreciation that you were talking about.
Yeah.
You know, like if you're doing a home improvement and you know studies are like in the $30,000 range, and you were talking about the bonus depreciation would probably be the only route. But is that subject to the time space percentage?
Yeah, that's a great question. So the answer is it depends. So I mean, depreciation, you should always consult with a tax professional anyway, but especially in this scenario, I certainly recommend you consult the tax professional to help you with the prorating, because it can depend even on where in your home the construction or renovation is, I should say, is occurring, right?
Well, it's actually a home improvement. So I'm actually a tax preparer myself.
Oh, okay.
And that's one of the reasons why I'm asking the question. It's like, there's no clear rule as far as times, whether it's a percentage on the bonus depreciation or not.
Yeah.
It's not very clear.
Yeah. I hear you. And it is my hope that, so it isn't very clear. And I hear your frustration. It is my hope that some information which is coming out from the state of California, my understanding is pretty shortly, is going to inform how child care providers can and whether they should, how they should prorate any renovations, modernizations, retrofitting to their facility.
Yeah.
As far as this grant goes.
Yeah, because I was a little concerned when you were talking about, you can expense it, you can, expense the grant money and it equals zero. And I'm like, huh?
Well, the business portion of the grant money.
Yeah.
Yeah, no,
but I would, like most of the clients that I have, they're all just home Schedule C, running at about 60 to 70%, business.
Yeah.
And, when I hear like, oh, you can expense 100%, I was like, really, how? And I read about the bonus depreciation and, it's like, okay, but that's why my question about the percentage, does it apply to that too?
Yeah, no, I hear you. So 100% depreciation is as far as business expenses. And again, I understand there is some confusion right now, and the state of California is getting some additional guidance and guidelines out about prorating. So I hear your confusion, and I'm going to pass that along to my contacts at the state of California, as well as my colleagues at Civitas Early Start. So thank you for sharing your question.
Okay, thanks.
Thank you. All right, Paula Sanchez.
I have a question about that depreciation. The 21, I made my taxes with my tax person, and they put a lot of the information that you gave us today. They put my house and a lot of stuff, so it's a little understanding for me, but I want to make sure, and I want the Spanish class tomorrow. But another thing, if is familiar with me, all this information that you give it to me. And I want to say thank you very much. It's clear for a lot of things from me.
My pleasure. I appreciate your feedback, Paula. And my colleague Vanessa is going to be facilitating the webinar tomorrow night at 6 o'clock p.m. Pacific time tomorrow. So she'll be there, I will be there.
Yeah.
Go ahead.
And I think so is one clear point, looking for a person who can help you make the taxes, because I working with 3 different persons, and for the last 3 years I have a guy who's explained all these things like we don't know, and a lot of person who's made taxes, they don't know either. So one little point is looking for some, another somebody or some company, like they do a really clear, and they give us really clear information about all these typical thing like you talking today. And I want to say thank you one more time.
You're very welcome, and I appreciate your feedback, Paula. Thank you so much.
You're welcome.
Elsa, you're next on my list.
Yes, good afternoon. Well, my question is this, maybe it might be a little confusing, but I mean, I was just wondering if I can roll over the grant that I won't use as business expense next year, if I need to use them.
So if you were to spend the money from the grant next year, what would that look like for you? Is that your question?
Well, yeah, let's say that I got that grant, if for any reason, I am unable, to spend the whole grant because of time frame with contractors or whatever, things happens, and let's say that happens to me, if I don't use some remaining grant, if I can roll over that expenses for the next year, if I need to use, well, I have to use them because that is what for.
Yeah, I hear you. So my understanding is that very shortly, the state of California will be sharing some more information about the grant, which also includes the final date by which you would need to spend the funds. That information will eventually be forthcoming. So as long as that aligns with the eligibility for spending down the grant from the state, then that is, from a tax perspective, that is fine. Just like in the example with 2021, you would be reporting the grant funds as income in 2022. And then if you performed business expenses in 2023, then those could be itemized as deductions for your 2023 taxes. So you'd still be coming out ahead in 2022. You would have to budget 30 to 40% in taxes for that grant. And next year in 2023, you would see a greater reduction of tax liability because of those expenses being incurred in that year. And I also want to mention as well, just to throw out there, I understand that it's not, especially being home care providers, it's not possible for many of us, and I understand that. But if you have been notified that you have received the grant and you perform your project this year, then the grant can reimburse you for funds that were spent. So that is just something else to keep in mind.
Yeah, I want to add as well that I overhear, and some meetings that's true that we will have only like 5 days, to return whatever money is remaining from the grant, because honestly speaking, it's little time frame for returning whatever funds left, you know, to the state, to whoever has to be sent.
Unfortunately, I can't speak to what to return money or anything like that. That's a question for a grant representative. But I certainly appreciate your question. Thank you so much, Elsa.
Thank you. Thank you.
Thank you. Riza, you are next on my list.
Okay, it's my husband and I. We have a question.
Hello.
Thank you for taking my call.
Yes, really quickly with the accounting part, you said there was a from the 50,000 to the 60,000. You take that all the way up to the $55,900. You subtract that from the 60,000. That's where you get the 4,100, and you multiply that at 22%, right?
Mm-hmm.
And that gives you the $902. So
that's right.
Okay, but you're going 4,950 for the 41,250 at 12%, and 1,465 at the 10%, right?
Mm-hmm.
So that tax difference for 60,000 is $7,317, and the 50,000 was $5,707 for taxes, right?
That's right.
Okay. All right. So the difference is $1,610 for the $10,000 difference.
That's right.
Okay.
So we did it correct.
So we did it correctly.
Yay! We passed.
Congrats, guys. Congrats. Yeah, it's very complicated. And this is one of the biggest misconceptions regarding taxes. And so while there are some really important high-level takeaways from this webinar tonight, this is really a key life skill, which many people, it's very confusing. A lot of folks, it's really tough to understand, right? So this is really a good key takeaway as well.
Okay, what's the tax bracket for the 22%? You started at 55,900. What's the top of that? What does that go up to?
89,050. And again, you do want to check on these because these can change based off of whether you are married filing jointly, single, head of household, things like that. So you can find these tax brackets on irs.gov.
Okay.
Okay. We're filed jointly. We're married. We're fully married. Yes. But I want to thank you for doing this. It's a lot of work, but it's a lot of good information. It's a different level of childcare, business. Yes. But I truly appreciate it. And whoever put this together, I've been in the business for almost 30 years and we are improving a lot. So I want to thank you for each one of you guys.
Thank you so much, Riza. I so appreciate that. And I will certainly pass along your comments as well to our contacts.
Yes. And I'm sorry to cut you off. I just want to say something really quick before I forgot. I know Tom back 30 years ago. He was my first tax preparer.
Wow, that's so phenomenal.
He was just starting. He came to my house a long time ago and we moved here from Long Beach to Riverside. So it was so cool. I don't think he remembers me, but he came to my condo that time. So,
phenomenal. Yeah. That's so great. We've loved working with Tom so far, and we've been honored to carry on his legacy.
Yes.
Tom Copeland blog, the Taking Care of Business blog.
Thank you. Thank you so much.
Thank you, folks. So appreciate it. Siobhan, you're next on my list.
Can you hear me? I'm sorry, I was trying to unmute myself.
No, you're all good. All good. Yes, I can hear you.
Perfect. I wasn't able to get in because I was having technical difficulties. Yeah. I just got in within the last 10 minutes. Now, will this be something I can go back and review, or is it just going to be live for us now?
Yeah, you certainly were not the only one. There were technical difficulties at the start of this presentation. We will ensure that a recorded copy of this presentation is made available to our contacts at the state of California for them to disseminate to you folks. So there will be a recorded version of this presentation available.
Okay, now my second question is, was there anything that I needed to know per se that I did not, find out? And I mean, I know you can't go over everything in general, but is there anything that maybe we needed to know?
Yeah, no, I appreciate you asking because I guarantee you are not the only one on this call who experienced a similar situation. The big takeaway is that you need to report the grant income as revenue in the tax year you receive it.
Okay.
And itemize your deductions for
Okay.
business expenses related to the grant. And then when your business expenses are itemized, it reduces your tax liability because it reduces how much money the IRS sees as taxable income. That is the big takeaway.
Got it. Okay. That makes a lot of sense. I appreciate that. Thank you so much. I don't want to hold you guys up.
You're very welcome.
I just hope to be able to see this recording in the future. Thank you.
We will be sure to get that out there. Thank you so much for your questions, Siobhan.
Thank you.
Marilyn, you're next on my list. Oh, I can't hear you. I see you're unmuted, but your mic isn't on. No. There's a mic button on the bottom left hand of your screen. Most likely just select a different microphone. Hopefully that'll work.
Can you hear me now?
Yes.
Okay, great. So my husband has a question. He's more of the numbers guy.
Sure, go right ahead.
Okay, so my question is regards to the timing of the grant funds being received and the timing of the actual expenses that we incur. I know you had some questions on this. So if we receive the grant money at the end of the year, but then incur the expense at the beginning of 2023, you said we have to claim the grant money as revenue and then pay tax on it for the tax year of 2022, correct?
That's right.
Okay. But if we had, let's say the grant money was 10K and we had total expenses of 10K and we had to pay the tax of 3,500, like you explained, that means we would have to come out of pocket 3,500 for the job, correct?
So the way you explained it certainly aligns with my understanding. However, I do want to share that there is additional guidance which is coming out from the state of California very shortly, as in perhaps next week, around family childcare homes and prorating costs. And so I think this information which is coming out, which isn't yet available, is going to be extremely instrumental in helping family childcare providers understand how to get even a better understanding of the tax implications, right? Because what you articulated is absolutely right. If you get a $10,000 grant at this time, you will need to use $10,000 for the project. And that means that you will see a 35%, approximate 30 to 40% tax. Right. In this situation, you will see a reduction in your tax liability in 2023. And again, just bringing it back to the guidance in the state of California, they're going to be giving more information soon that might clear up this picture a little bit more. So I know that's not the answer you were looking for, but I hope it is a little helpful.
Okay, thank you very much.
Thank you.
You're welcome. Wendy, you're next on my list.
Hello?
Yes, hi, Wendy.
Hi, yes, I have a quick question. I think I was late too. I had a same problem. But I think you said also apply for a corporation if you incorporate it.
Mm-hmm. What about that?
So like the tax bracket and how we report it will apply to corporations too, right?
Yes. So in this, let me get back to that example here. Where were we? So in this example, when you're considering how much of your revenue is going to be subject to this, if you are incorporated as an S Corp or another type of corporate entity, then you don't have to consider the self-employment tax. That is largely only if you're a sole proprietor. So that's one less thing to consider here. But,
okay, awesome. Mm-hmm. But
otherwise, this tax bracket piece is about the federal tax bracket, and it does apply regardless of your incorporation status.
Yeah, because of the income, roll over to the president, and that will be the owner, and depends on the tax bracket, like you were saying, right?
Exactly. Exactly.
Okay. Got it.
And the big takeaway here is that if you happen to elevate, if you're in that 12% bracket and then the grant brings you up to the 22% bracket, there's no need to fret. The rest of your money is not going to be taxed at 22%. Your money, the additional money will be taxed. Whatever exceeds 55,900 is going to be taxed to that 22% marker.
Okay. Got it. Thank you so much.
Thank you for your question. Eva, do you have a question?
Hear me?
Hello, I can hear you.
Okay. My question is, in order for us to apply for this grant, we went and got estimates stating this is when about 6 months ago. Okay. And now if you get the same estimate, it's probably about 15% to 20% above the original one. So how is this going to play, when you're spending the money on renovations and stuff like that? Like mine, it was air conditioning and, to make because the one that I have is like 30 years old. So, and windows and things like that, because everything is old. So how do you, when they gave me an estimate for a certain amount of money, but now it's like 15 or 20% more, how does that just save the bills, save the, and paid? Or I mean, like, I don't know, I don't get it that way. I mean, I have a good bookkeeper, but how does that work in that scenario? Because everything is gone up. Every day you go to the store, every day I pump $50 of gas today, and I only got a quarter of a tank, which is ridiculous. So it's like in my license, I'm licensed for 14, but I only have one kid enrolled because there's no kid. Nobody wants to work. No parents are not looking for daycare because they get free money from the government too.
Yeah.
So what do you do in those cases when you don't have when you don't have enough kids?
Yeah.
Everything is more.
Those are really valid concerns. I'm hearing everything you're saying. I understand. Unfortunately, I'm not able to answer those questions tonight. Those questions are for the grant administrators. I'm just here to talk about taxes. So I hear you, and I hear that, I hear what you're experiencing, but unfortunately, I'm not able to resolve your question tonight.
Well, yeah, I just wanted to know how do I will, there is, I'm going to consult a couple of bookkeepers to see which way I have to do this, because I want to make sure I'm not going to end paying more or paying a big percentage once I do the renovations, and then I don't want IRS to come back to me and says, oh, you owe me whatever 20% or whatever the money you got or whatever. So it's something before spending. And what's the timeline you need to spend that money? You said a year and a half, or I mean, like, if I was thinking about holding on, get another estimate and holding on to the money to make sure that hopefully things go, the prices start like leveling, because right now, I mean, just in general, food, everything went up.
Right.
And then not only that, like me, I need windows. A lot of the places don't even have the windows in stock. So I have to wait 2-3 months to get my windows, and I'm going to have to turn around and report this money when I haven't even spent it.
Right.
So it's just frustrating the way things are doing.
I certainly hear you. And I think reaching out to a tax preparer, if any folks on the call haven't done it before, I highly recommend that you do so this year. And for many reasons, right? Not only the implications of the taxes on your income, but also about depreciation and how to maximize on that depreciation deduction so that you can see a greater savings for tax year 2022.
Yeah, because we want to make sure we got the amount of money that Uncle Sam wants to give it back to them, not spend it all. And then where are you going to pull with the low enrollment? Where are you going to pull the rest of the money to pay taxes? So it's like we all have to be careful how we spend this money and how much how we spend it, period, and how much do we have to pay back.
Yes, I hear you. Thank you for sharing your concerns. I certainly
Thank you. I hope this was good for not only me, for a lot of people, because I'm sure we all are in the same boat.
Yeah, I hear you. Thank you, Eva.
Thank you.
Jessica, I see you next on my list. What's your question?
Okay. Apenas te digo que I want to hear.
Hi, yes.
Okay. Can you hear me?
Yes, ma'am.
Okay, great. Thank you. I want you to clarify for me tomorrow's meeting in Spanish. Is it at 6 p.m. or is it at 9 p.m.? Because you guys post something in the chat at 9, but in the email you send it says 6. So can you please clarify, because I'm sending it out to my Spanish speaking providers.
Yes, it's going to be at 6 p.m. tomorrow, 6 p.m. Pacific time. My colleague Vanessa will be facilitating that webinar. She's been on the call this whole time. During the webinar, I understand a lot of folks had to leave, had trouble entering the webinar, but I introduced her at the beginning, and she has been available to help with that. So Vanessa will be facilitating tomorrow's webinar, and I certainly hope, Jessica, that you found that helpful.
Un placer, Jessica. Okay, espero nos unas mañana.
Claro que sí, es que hay muchas muchachas que no entendieron la clase ahorita en inglés, y entonces pues es muy necesaria para nuestra comunidad, pero
claro que sí.
Esta confusión, ¿no? De las 6 o de las 9. Dije, déjame preguntar.
Sí. Qué bueno que preguntaste. Lo aclaré bastantes veces, pero seguramente entre tanta información se perdió. Pero te veo a las 6.
Nos vemos a las 6. Gracias.
Ok, hasta luego.
All right, we're coming up at almost a half hour over, and so we're going to have to limit the number of questions we have as we wrap up. The next person, so I went Eva, Jessica, Rochelle. You are next on my list. Do you have a question?
Hello.
Hello. Hello.
Hello.
I can hear you.
Okay, thank you very much for taking my call. My question to you is, if we have been granted the funds, and I know they're giving us 4 months, 120 days to take care of using the funds. And if I want to make sure that I spend the funds in the same year that I get the funds, is it okay if I spend, and I don't know if you can even answer this question, if I could go ahead and charge the items that I would like to get, I can make sure that I spend that money in the same year, they will still reimburse me for that. Is that correct?
Right. So my understanding is that August 1st, 2021 was the earliest date from which you could spend money. You could have expenses related to the grant. That dates back to August 1st, 2021. So my understanding is that every date after August 1st, 2021, until the grant administrators tell you otherwise, are eligible dates for which to spend the grant funds on the grant project. Does that answer your question?
Even before we receive the money, that's correct.
Yes.
Okay. Absolutely. That answers my question. Thank you very much. I have one more. If we do not, if the grant is taxed, can we keep money aside to pay for our taxes from the grant? If my CPA says, okay, you're gonna owe, I'm gonna say $5,000 because you received this grant, are we able from the grant funds to put that money aside to pay our taxes for the next year? And would that be counted as us using our grant toward us, I know it's not a renovation, but
Yeah.
can we?
So that would be counted as using the grant funds toward an expense other than the grant approved project. So that would not be, my understanding based off of how you described that is that would not be allowable.
Thank you very much. I appreciate it. I thank you very much for your time. It was very informational and you have an awesome day.
Thank you so much. You as well.
Thank you.
All right. Rosie, you are next on my list. Do you have a question?
Hi, my question is, if I will to get the grant, what will be the best way to keep the expenses related to the grant, like clean to prove how I spend the money? Do I need to, I mean, I guess this is more like an advice question. Should I just keep a separate account for that just to keep track of that specific expenses for that grant, or just keep the money the same in the business account and let it run how I usually do my expenses?
Rosie, that's an excellent question. I'm so glad you asked that. The big key with tracking the grant is documentation, right? So the big thing is you want to have documentation that shows what you spent, how much you spent, what you spent the money on, who you paid the money to, that you paid the money, right? So ideally, that's perhaps if we're talking about construction projects, that might be an invoice from the company you're working with that's dated, that has amounts of money on it. That's going to be your key to showing where the grant money went. So I'd focus more on ensuring that you get appropriate documentation and then keeping track of that documentation as well, right? So once you get that invoice, don't just have that one piece of paper. Make sure that you make copies. Maybe you scan it into your computer so that if you are ever asked for that documentation in the future, you have it ready to go. That is the key thing. Documentation is, from a general standpoint, generally the most important thing, more so than separating out your business and personal.
Okay. So the money, if I will get the grant, I will just deposit the money into our normal business account as, you know, as business money. Is that?
As long as you spend the grant money on funds on expenses that are applicable for the grant. Then
oh yes, of course.
That sounds reasonable.
Of course. Okay. Thank you.
Thank you. Next on my list is Kalarina.
Yes, I have a question about the grant. Yeah. So, okay, example, if I got like $40,000 and I use it for the project like a 30,000, and I use it for the expenses. The rest I use for the expenses, like because I'm child care home. If I can use for the mortgage, or I can use for the like a business expenses. So is that problem, or they don't count that?
Yeah. So it sounds like for something that specific, I highly recommend that you reach out to grant administrators and grant representatives. My understanding is that more information is coming out in the near future, and those folks will be able to work through with you.
Okay, thank you so much.
Thank you. I appreciate the question. All right, Angel, I see you on the list.
Hello?
Hello.
Hello?
Hello, I can hear you.
Yes, two questions.
Yeah.
How my utilities can be deducted? We became a corporation recently. And the other one will be my miles on the car. Are those still applicable for deductions?
Yeah, so as a family home childcare provider, there are certain amounts of proration that folks need to do, right? And that's typically your time space calculation. So the tomcopelandblogs.com, which is the link that you see on your screen, that has a lot of information about time space calculation and what it applies to. So time space calculation does apply to if utilities in your home, and there are multiple methods actually for calculating how to attribute vehicle use to your business. So I certainly recommend you check out that link. And then also there is an ask the experts button. It's getting late over here on East Coast time for me. There is an ask the button on tomcopelandblog.com. And Civitas Strategies Early Start does answer questions directly from childcare providers on a regular basis. Any questions about the information on the website, please do feel free to reach out.
Thank you so much.
Thank you. Oscar, last questions of the night.
Hello.
Hello.
Hi. I want to ask about will you guys do the Chinese session for our Chinese community?
No, thank you for that question. I am going to bring that back to my team, and we will make sure that we get you the information that you need in Chinese language. I do apologize if there was miscommunication tonight around provided. I think we also no. Okay. All right. Is that your only question for now, Oscar? All right. Very last question from Glory, and then we're going to close out the information. Thank you so much for everyone that joined us tonight. Glory, what's your question?
Hi, thank you so much for all the wonderful information. I do have a question, however. So I know that an email was sent out and it did say grant status will be, sent out based on rolling basis. Are they done sending it out? Are we still expecting or?
Yeah, no, I certainly appreciate your question, Glory. Unfortunately, I can't answer any questions related to the grant distribution. I understand there is going to be a great deal more coming from the state of California shortly.
Okay, thank you.
I know more information will be coming. I hope this webinar was informative for everyone who joined. Thank you all so much for your time, and I hope you have a great rest of your night. Take good care. Bye-bye.